In this video, I'm going to show you how you can use the daily open, the first 30 minutes of the daily open, and a fair value gap, how to get your perfect entries. I'm going to show you an indicator you can use completely free that's going to help you draw out these levels so you don't get confused. So the first thing you want to do, you want to go to indicators and you want to type in Orb Algo by Flux Charts. These are the settings. I literally just changed the orb time frame to 30 minutes and everything else is completely default, and I changed the colors to all black. So this is completely default. So what we wait for when we have our first 30-minute candle open on the daily open, we're going to wait for the first 30 minutes to finish, and we're going to get the open and the high and the low, like as you can see right over here, the high and the low. And then what we want to wait for, we want to wait for price to either take liquidity at the downside or at the upside. And as soon as there's a fair value gap form in the opposite direction right over here, we are going to enter our trade and we're going to target the next level of liquidity. So let's rewind a little bit the price action. Let's go through a few examples and then I can show you exactly how this strategy works. So we have our daily open right over here. So now we wait for the first 30 minutes to form. As you can see, we just here on the 5 minute. So now we wait for the first 30 minutes to form, 25, 30 minutes. So this is our range, the high and the low. What we wait for now is either a sweep on the upside or the bottom side. And we're going to enter from a fair value gap entering in the opposite direction. So as you can see, we broke down. Now we're going to wait for fair value gap to form in the opposite direction. Have we gotten yet? No, not yet. There's a big push. There we go. So you can clearly see we have a nice fair value gap that's literally resting right over here. And now you can enter your trade on the close of this candle. You can put your stops below these bodies of the fair value gap, the first candle of the fair value gap, and you can target the next level of obvious liquidity or any point of interest. In this case, you can see it's right over here, and then you can see it's a 1.8, or you can, if you want to be a little bit more conservative, you can target a 1 till 1 to break even, and then you can target a 1 till 2 fixed risk to reward trade. In this example, let's do a 1 till, let's do the liquidity, and let's see how this plays out. As you can see immediately, and price also went to the 1 till 2 risk to reward trade. So let's play price forward and let's look at another example. So here is another example. We have our daily open. So there's our first 30 minutes of the daily open. So now we're going to wait for the sweep from the downside or the upside. There we go. We have one on the downside, and now we wait for a opposite fair value gap direction. Let's see if we get one. Price is moving slow. Not yet. There's a big push. There we have a clearly nicely fair value gap. You can enter your trade on the close. You can put your stops just here, first candle's low, and you can target the obvious level of liquidity, this one here, or that one there. Let's take that one. That's a 1.3 risk to reward trade. I will always target something more than a 1 to 1. So this is not, your stop loss is bigger than your take profit. So that won't be a good trade, but this will be a good trade right over here. If you want to go there, stat high. Remember 1 till 1, you can put your stops at break even. So let's see what price does. There we took liquidity. Let's see if that was a 1 till 1. 1 till 1 stops to break even, and we got stopped out. So this is a break even trade right over here. Let's play price forward. Let's have a look at another example. So here you can see we have our 30-minute orb. Let's see if price takes the up or the downside first. To upside. So now we're waiting for an opposite fair value gap to form. No fair value gap, no fair value gap. So price is not willing to continue down yet. There we have our fair value gap. And we can enter on the close right over here. Stops above the first candle's fair value gap. And then in this case, is that more than 1 to 1? No. So here's your 1 to 1 for a break even trade right over here. Where's your most recent low right over here? So you can drag your TP to this low and let's see what happens. And we got stopped out immediately. So let's have a look. So now we took the downside liquidity. We also left a fair value gap right over here. So let's get into a buy. Stops below the first candle's low. And we can target the next obvious level of liquidity. It will be this fractal high right over here. And let's see what happens. There you go. Perfect 2.3 risk to reward trade. It's already at a 1 to 1, so you already got them taken out at break even. If you're not a break even trader, that was a perfect 1 to 2, 3 risk to reward trade. So let's look at one more example. All right, so here's the next 30-minute daily open. The orb drew it out. Remember, link is in the description. Orb algo by Flux Charts. Go have a look at Flux Charts. They have some awesome indicators. Link is in the description. Go have a look and let me know in the comments what you think. All right, so this is our 30-minute orb. Let's have a look. There we go to the upside. So now we wait for that downwards fair value gap. Haven't formed yet. Now we took the downside as well, but we did get our fair value gap right over here. You can enter on the close of this one and put your stops above the first one. And then the next obvious level of liquidity is going to be this low right over here. Let's see what happens. We got stopped out. And also we on the downside now. Again, there's a fair value gap that has formed right over here. Let's just replay one quickly. So we got stopped out right over here. Now we took liquidity on the downside, and now as the third candle played out, we created this fair value gap, the one that took us out of our trade. Now let's get into the trade. Stops below the first candle's low, and you can target the next obvious level of liquidity. That will be a 1 risk to reward trade. So that's the break even. Or you can target the next obvious level of liquidity, and that's a 3.58 risk to reward trade. There we have our 1 to 1 already. So if you are a break even trader, you're already at the break even. Let's see if we get stopped out or if we continue to the upside. Had a big push up, now we're consolidating, and eventually we came down. This is a nice big move. 394 pips on Nasdaq, quite big. So yes, a 1-to-1 break even trade. And then if you want to take your risk to maybe an order block, that's all up to you in the case this example right over here. So what we want is literally we waiting for a liquidity sweep. We wait for fair value gap. You enter on the third candle, and then price needs to continue. If it reverses like this, you'll immediately see we created another fair value gap after the downside liquidity has been taken, and then we had this nice big push up right over here. Awesome, everyone. Hope you enjoyed this video. Link is in the description. Go have a look at Flux charts. Also, please leave a like and subscribe, and then I'll see you in the next video. Cheers.